Assalamu Alaikum everyone, welcome back to the channel. The market at the moment seems very overvalued. Every day the stock market's hitting all-time new highs. Whenever you look at the S&P 500, every single day it looks like it's going up and up and up. So when you look at it for 1 year, you can see it's up about 27%. Year to date is up 23%. Last 6 months about 17%. Almost a 3.5% just this month, and the last 5 days almost at 1.5%. That's for the S&P 500. When you look at the Dow Jones, for example, the Dow Jones is actually up year to date, for example, 17%. For the year, 21%. 6 months, about 13%. Just this month is about 2% up. So it's probably lagging in comparison to the S&P 500 for just this month, but not by much. Now, when you look at all of this, and a lot of people talk about, the market being overvalued at the moment, and there's, we're expecting a crash, this and that. Obviously, it's scary a little bit, but at the same time, you need to have your own, investing strategy. And one of the things I look for is every single time I get opportunity, when I'm not at work and I'm home and looking, at the stock market, I do a little bit of research to find out companies that are undervalued, whether in my portfolio. So this is my basically companies that I own right now. And as you can see, I've got about £32,000 in this portfolio, and I've got another portfolio in Freetrade that I've got about almost £2,000. Now, when I look at all these companies, some of them are undervalued, some of them are really overvalued at the moment. As well as that, there's obviously, I look at the S&P 500, see companies that are quality companies, that are, blue chip companies that have been around for a long time, pay dividend, or even growth companies that have been around but that do not pay any dividends. So, and that's what I've been doing. So my strategy, even though I'm mainly focusing on the dividend side of things, I'm also looking at growth side of things. Companies like Salesforce and Qualcomm, even Qualcomm pays small dividend, but Salesforce doesn't pay any dividend and is part of my portfolio. So I've got companies like CrowdStrike, which is a kind of smaller version, but again, it doesn't pay any dividend, but I know it is a growth company and it was undervalued up until very recently. So what I want to show you this video is, bring it to your attention 4 different companies that you could potentially invest in that are currently undervalued, which is very difficult to find in this market, because when you look at the PEs of a lot of these companies, it's really, really high. We're talking about in the 30s, in the 40s, some of them are in the hundreds. So we need to be careful, and we need to invest smartly, and we need to make sure that we're not really just throwing money and just spending basically money on companies that they don't have the growth, but they are overvalued at the moment. Because sometimes it's okay to pay little bit more for a growth. If the company is growing 20, 30, 40% in the next couple of years, then you're willing to pay a little bit more. And that's why when you look at Apple, for example, Apple has been hitting all-time highs in just the last couple of days. I don't know how much is up this month. Okay, you can see almost 6% up this month, and just this week is almost 4.5% up. I think today is up almost to 1% or something like that. Let me have a quick look. Yeah, it's about 1% up today. And it's been doing this for the last couple of days. A lot of people are paying a lot premium for Apple because they know the growth of this company. They know they're a very innovative company, and they will come up with new products in the next whatever years. That's what they're paying for. And that's okay. Okay, sometimes that could be fine. Even though it's not the best strategy, you're paying more for the growth of these companies, and that's why their PEs are very high. So for example, if you look at Apple, is almost about 40 PE, and that's not good, but obviously some people are willing to pay. I haven't bought Apple shares for a very, very long time. In fact, the last time I did anything to Apple, I sold about 10 shares of whatever Apple I had at the time. Right, so the first company we're going to look at is Polaris. Polaris is one of those companies that you probably never heard of. They are a very small company. It's market cap of just $7.2 billion. Okay, the company, in fact, it basically manufactures power sports vehicles. So it's those little cars they use for the snowmobiles, the motorcycles, global adjusted markers. Basically, they do boats as well. So they do a lot of off-road vehicles. So recently I went to a park in Leicester, and it was funny enough, there was one of those little cars or whatever you're going to call them they use inside the park, and it was a huge park. So they the people that actually maintain, the maintenance team, actually have one of those cars, and it was actually manufactured by this company. And I thought, oh, actually this is interesting. And then I started doing a bit more research. Yesterday I was actually out, and then I saw another one of those kiddie cars. Again, it was basically developed by this company. So let me quickly show you some of the pictures, some of the let's just go to their website and I'll show you some more. Yeah, so as you can see the off-road vehicles, the on-road, the snows and all this. So they develop all of these types. So when I hover over, you can see these are the type. And I think the ones I saw were, I think this kind, the ranges, for example, for the parks and so on. Okay, so you can see they're not that big company, but they actually have been around for a very, very long time. So it's yeah, I think it was that one. Even the golf and places and whatever, they use this type of cars that this company develops. So they currently pay a small 2% dividend, which is very good. Like I said, market cap of 7.2, so that's quite small. Their forward PE is only 12 at the moment. Okay, and if you look at the year, so this year, so just they've been up about almost a 14.5%. Year to date, almost 25%. Last 6 months they down, last 1 month they down, and the last 5 days they down. So they have actually had their earnings very recently, and I think it's just because of that it's actually down. Now according to Morningstar, the company is way undervalued at the moment. So it should be about $173, the fair valued, but currently it is $119 per share. Let's quickly have a look at the finances side of things. So the income statement, as you can see, is actually growing. Okay, it's going in the right direction. The gross profit is actually growing at the same time. And then when we look at their balance sheet, okay, so the balance sheet, what you're looking for, if the company has enough money to actually pay off their debt. So this is the current assets, so that's $2.2 billion against current liabilities of 1.8. So they've got enough cash to pay off in the last 12 months. If something happens, the next 12 months, sorry, if anything happens, they've got enough money to pay that off. And then when you look at their free cash flow, is in the millions, but obviously because it is a small company, $800 million in the bank to pay off that dividend. So that is small dividend, even though it says basically about 2% dividend that they pay. Now, so this is really solid company. If you're really interested, a small cap company that have been around for for a few years or for a long time, but they have great products. And the only problem I can see is because of COVID, their prices went up. So maybe in the next, when everyone goes back to work and so on, and we don't have to isolate anymore, we don't have to be our own, or we just be, when everything goes back to normal, I'm worried there might not be a lot more sales. Because when I read the documentation for this year, the current, based in comparison to the last 2 years, it was a lot higher. I'm not sure why that's the case, but obviously something that you need to look into if you're really interested in this company. So let's have a look at the next company. Right, so the next company we're looking at is CRM, or Salesforce. Salesforce is one of my favorite companies out there at the moment. They definitely remind me of Microsoft in the early 2000s, and they are currently, market cap of $259 billion. They don't pay any dividends at the moment, but I'm sure the company is maturing, so I'm sure they will start paying dividends very soon. When you look at this year, they're down. Last 6 months, last 12 year to date, sorry, they actually are up about 21%. Last 6 months, about 23%. Just this month, about 10%. So a lot of people have discovered this company is great, and they've realized that basically they are undervalued at the moment. And in just the last 5 days, almost a 3% up. I've been talking about this company for a long time. This company, like I said, reminds me of like Microsoft, because they kind of do similar things, but they focus more on enterprise cloud computing solutions with focus on customer relationship management worldwide. What that means is basically they work with small companies, big companies, to kind of actually help them analyze the data for them, store the data for them, basically come up with graphs, quotations, whatever it is the company needs in order to grow their customer service and provide excellent customer service. So they actually work with small companies and big companies. So I think it is one of those reopening companies, because I feel like once basically we all go back to the office and everything goes back to normal, this company will start on, you know, small companies or small shops or whatever start opening their business, they will start to benefit from that as well. They have a great products and they're very sticky. That means once you're in their kind of environment, if you buy into their cloud, if you buy into their customer relationship management systems, then once you're in that basically enterprise, then it's very difficult to leave. And that's why they've got a lot of customers that stayed with them for a very long time, and some of their customers are some of the biggest companies in the world as well. They're currently undervalued still. I've been talking about this company for a few months now. I've invested in it, and you know, this company has actually been undervalued for a very long time. So fair value should be about $292 per share, but currently $268 per share as we speak, about $266 per share. It's down about just below 1% this week, or this just today, right? So when we look at their financials, they've actually had their earnings recently. I was planning to do a video on his own, but I didn't have the time when they released their earnings. But we can have a quick look at some of their earnings basically from last few months, just this year. So when you can look quarterly, by the way, when you're on Yahoo Finance, but we're going to focus on just the yearly. And as you can see, it's actually growing massively. And one of the things they're probably growing so much is because they bought Slack, and Slack is another company that's actually, they bought over $25 billion, I think it was. And then this is the only concern I have. The only concern about this company is they're burning a lot of money. Operating revenues is actually quite high. So what that means is they basically, in order to make this much, they actually spend this much, and then obviously the cost of their revenue was about this much. But one of the expenses and operating expenses is actually quite high for a company that's almost maturing, and that's probably why they don't pay any dividends yet. So will be interesting to see maybe in the next couple of years if they start paying some dividend. So they do have an excellent balance sheet. Again, their current assets is about current assets 21 billion, so almost $22 billion there, against their current liabilities of $17.7 billion. So they have enough money to cover that, and their cash flow is actually brilliant. So last year, so you can see it's growing, their free cash flow. This is the money they could potentially use to buy another company, which they have been doing. And this is the reason why I said they're very similar to Microsoft, because Microsoft still does this. Okay, so they've got a lot of money, they pay very small dividend, and then they acquire a lot of companies that are that doing amazing things, that they feel like they will add value to the company. They don't just buy it, they grow that way, which is really good, because they have a very solid business and they actually add into it by acquiring other companies. Like I said, they don't pay any dividend, but I'm hoping that they will do very soon. So again, if you're looking for undervalued stock that currently way undervalued from where it should be, even Yahoo Finance, I think, let me just quickly check. Yahoo Finance, there you go, is actually a buy at the moment, and their average will be about $296 in comparison to where it is at the moment. Okay, so that's the second company. Third company that we're going to look at is Air Products and Chemicals. This is basically a company that primarily focuses on marketing atmospheric gases used in the industrial processes and equipment used for separation, storage, and transport of these gases. Now, this is in the material sector. This is a company that I've been actually buying heavily, because I realized they're actually way undervalued than I actually initially thought. They are, but basically their market cap almost $60 billion. They pay very good dividend. They will pay you $6 for every share that you own, which works out about 2.2% of their revenue. And then they are not cheap at the moment when it comes to their PE, the forward PE, but according to Morningstar, okay, so if we have a quick look, I think they were 3 stars or 4. There we go, 4 stars, which means they're very undervalued at the moment. Like I've always said to you, don't just believe in this, just also look at other basically companies or other websites to get more information. But their fair value is about 316, currently is $269 per share. And like I was saying, they pay really very good dividend. And now we're going to look at their financials and see if there are anything that we need to worry about. So again, 8 billion, 8.9, 8.9, and then 8.8, because 2020 was a crazy year, so I'm assuming that's because of that. And then cost, overall gross profit, so you can see the gross profit actually last couple of years kind of stayed almost the same. It just went up a little bit, which is absolutely fine with me. Then their balance sheet, so we're looking at total current liabilities of $8.6 billion against $2.4 billion of current liabilities. So they've got enough to cover that. And then do they have enough money to pay off the dividends? Yes, they do. So this is growing now. So the last trailing 12 months is $1.45 billion. So they've got enough to cover that, and this is actually growing fast as well. As you can see, it's actually went down on 2020, but it's now grown up, grew faster than I actually expected. Now again, this is really undervalued in my opinion. I've been buying this company heavily. So right now I've actually owned 10 shares, almost to basically £2,000. Slightly down a little bit, but I'm not worried about that because I'm getting paid while I actually hold this company, and we'll see how that goes. Right, the next company we're going to look at is Merck. Merck is a pharmaceutical company. So they are a global research and research-driven pharmaceutical company that discovers, develops, and manufactures and markets a range of innovative products to provide human and animal health. They have I think it's called Keytruda, a cancer product that they actually was just one of their biggest that in terms of drugs they have. At the same time, they actually have so much drugs on the pipeline. So I'm excited to see what happens in the next couple of years. They are currently trading at $76 per share. I've been talking about this company for a very long time. I've had them for a long time. They pay really very good dividend of 3.4% yield. And then they almost are $193 billion company. Now, according to Morningstar, this is also very undervalued, so it should be about $94 per share. They're fair valued currently $76 per share. And then when you look at their overall finance, so if we go to financials, you can see in the last few years, so the last 5 years, 40 billion, 42 billion, 46, 47. It's going the right direction to the point the last 12 months is actually almost $50 billion. Gross profit, this is brilliant. Look at this. This is what you want to see. 30. So they made this much, and they actually gross profit of 34 billion out of that money, which is excellent to see. Then you've got balance sheet. So let's have a look at the current liabilities. Current assets first, so 27, almost $28 billion against current liabilities of $27 billion. So it's slightly bit worrying there. So you just, this is about just not that much of a difference in terms of current liabilities, but at least that they can cover it. So this means basically, if anything happens to the company in the next 12 months, can they pay off any debt that they have without going down basically? Okay, and the answer is absolutely yes. And when you look at their free cash flow, actually is brilliant. Okay, so free cash flow is about $5.2 billion, slightly down from at the moment last 12 months, but when it comes to 2020, the year of 2020 was $5.5 billion. Now again, like I said before, you just need to look at other websites, get more information on some of these companies, look at their data, look at their last 5 years earnings per share and things like that. And as you can see, is a buy at the moment. Okay, according to Yahoo Finance, again, they actually agree on the average. It will be about $94 per share. I think Morningstar was also 94. There you go. It's about 94. Now, these are solid companies. Company that is $193 billion company. Drug companies actually do not go out of business that quickly. They might have up and downs. There might be regulations and things like that affect them. But generally, they do well in whatever markets is going on at that point, whatever the markets are doing at that point. So these are really solid companies. They have very good dividends, some of them don't, but they are undervalued. So the reason I wanted to do this is I know I've talked about these companies before, but they are still undervalued. And I do own the first one, so that was Air Products and Chemicals. I do own Merck, I think, somewhere, wherever that is. There we go. Basically it's down a little bit at the moment, and then the Salesforce. So I own 3 shares here and 5 shares, I think it was 5 shares on the, let me actually quickly check that because I have my spreadsheet here. So I do own, yes, another 5 shares, and yes, you can see I'm currently up 183 or 13% up for this year. So again, this is my overall portfolio, and these are the companies that I want to share with you. Hopefully you're not buying some of those crazy companies that are at the moment so overvalued. But again, if you are, just be careful, please. I hope you enjoyed the video. As always, if you lasted this long, please like, subscribe, share the videos with as many people as you possibly can. I really appreciate all the feedback that I'm getting. I'm trying to help everybody, trying to help myself first of all, because I want to make sure I learn, and I will obviously pass on that knowledge and obviously bring you some of the best companies out there. Inshallah, we can all invest. I'm going to do a quick video update, like a portfolio update, maybe this week or next week, because I want to give you quite a few updates, because I've actually made quite a few changes to the portfolio, and I'll explain that inshallah next video. If you lasted this long, I really appreciate you. Just leave a comment there. If you like any of these companies, comment. If you hate them, comment. Whatever the situation, comment. Let me know if you have any questions. Assalamu Alaikum.